The central clearinghouse business is fraught with a lot of industry politics in a way. All of the players who are your members today are not necessarily only your members, and they have their own little agendas in place as well. What's it like working with the banking industry, and what do you need to do to get it right in terms of the relationships?
You know, we took an approach of creating a committee of all the 17 banks who are players in this marketplace, right? So we worked with them over a year to get what I would call the most common denominator among all of them, right? And that's the offering that we brought to market. So from there, 12 of them became members, and the other 5 are in various stages of internal approval. So the fact that we could get all of them to agree to a reasonable level. Right now, I think the issues will come up in terms of, like you say, each of them have an agenda that is their own and an agenda that is shared. And the skill for us is about finding the agenda that is shared and making sure we can provide for that. And you know, they're not going to stop competing with each other because they're clear with each other. But what it does is makes what I would call the smaller banks a little more powerful in the fact that they don't have to you know, they are on an even footing with the bigger banks. So there's a plus and a minus. The plus is that it helps the smaller banks, and the minus is that the bigger banks might feel that they lose some of the clout they have in the marketplace, but they all recognize that the status quo of a dominant 5 banks in the world, which are too big to fail, is not going to continue. Therefore, they are also trying to chart a way forward.
In terms of building the CCP business, there's a lot of education involved. You're trying to persuade some of these traders to bring on stream trades that are being run OTC at the moment. It's a pioneering business for you. And the moment you get it right, 2 things probably have to happen. One is you probably have to form an association of sorts to create even more memberships and clearing, and make the clearinghouse itself as neutral as possible as an organization. Or you need to be sold to a larger exchange that probably can make sense of the volumes that you create through the CCP.
Yeah, you know, we've been operating the CCP now from November, right? So from November to now, we've cleared about $60 billion worth of Sing dollar IRS trades. Now, there are clearinghouses in the US who have been operating for probably a year and a half who have done 3 billion or less. So it kind of does establish that we have subscription to our model, and we are what I would call well engaged with the banks. But to your point of when does it become, you know, today we are a for-profit exchange and we charge a commercial fee to do this. And at some point we would become, you know, the banks would say, why am I paying so much? Why don't I have this as a utility? And the way I kind of talk about it to the OTC is you're still buying by the drink and you haven't bought the distillery. And so at some point when you really want to buy the distillery, there is a discussion, right? So we will come to that, but I think that it is still some ways off for Asia. We kind of look at it as a 3 to 5 year horizon.
But even in starting the CCP business, you do take on some of the risk. You're not a pure transaction provider.
That's right, yeah.
And as the competition increases and there are different options in terms of CCP capabilities, you find that you probably need to offer the risk part as a value-added advantage, which then changes the model of your business.
See, that's where all the CPSs, IOSCO, Basel, all of that come in, right? So the key that they got to do in some ways is kind of ensure that the minimum standards that everyone has to adhere to are there. So if you take a CCP as an example, one of the things that is in the Basel III is the amount of capital that a participant has to provide against exposures to a CCP is based on how much capital the CCP has. So a well-capitalized entity like SGX kind of putting up a CCP will have significant advantage for the participant as against going to a CCP that is not as well capitalized. So if someone operates on the minimum that the Basel allows, then what happens is the participant has to earmark more capital. So that's where our strengths, which are an extremely robust balance sheet, zero debt, ability to kind of back ourselves in terms of what we do, is important. And I think that we will be able to take advantage of those strengths, which in the context where capital is very cheap, those strengths don't look very visible. But in the next 3 to 5 years, I would say there'll be big differences.
But are there risk mitigation, ring fencing that business? Is that important?
Yes, it is.
And you already ring fenced?
Yeah, we are. I mean, so the way we do it is to run stress tests, and we kind of ensure that we are adequately provided for the so-called tail events or the extreme events.
Give us a sense of the collaborations, the joint ventures that you put in place. In India, you've got into a little bit of a bind because you've got 2 joint ventures, and the original one with the Bombay Stock Exchange seemed to be contravened as a result of your subsequent one with the National Stock Exchange. How successful are these joint ventures? Are they just an effort to be able to provide choice to your customers and just having a good storefront?
The ability to build alliances and the ability to kind of work with other exchanges is important over time for us, because we are by nature, we look at all of Asia as our marketplace that we want to serve. So whether these 5% shares help, I don't really have a view whether it helps or not. I don't think it hinders, but it doesn't particularly help either. So in the context of India, what happened is that we always used to trade the Nifty on SGX well before we took the 5% share in the Bombay Stock Exchange. And one of the things that we wanted to gain out of the share in the Bombay Stock Exchange was probably a listings platform that would allow Indian listings to come out. But the regulations in India still don't allow a primary listing for an Indian firm outside. And it is something that we're still working with the regulators in India on. And where we think we'll go on that is kind of become the listing location for Indian firms wanting to expand overseas. So if you take the example of Punj Lloyd, which is one of the firms, they've incorporated themselves in Singapore. They call themselves Sembawang in Singapore. They're a big construction company with ambition in Indonesia and all of ASEAN. They are incorporated in Singapore, and they are kind of listed on us. So it's an Indian firm that is looking to go overseas that lists here. Now, if you take the Indian business ambitions, they are now quite outwardly focused. At least I would say about 40, 50 Indian companies for sure are externally focused, and they need to raise capital for those expansions, and that's where we'll play a role. And BSE will help in that. And the NSE, like we said, the Nifty is the one that we trade, and that is the de facto contract for the Indian derivatives market. The BSE doesn't have an equivalent.
But volumes haven't been, very encouraging.
No, Nifty is a hugely traded contract. In fact, if you look at Nifty, it's grown at more than 50% compounded over the last 4 or 5 years, and it's about 25% of the volume of Nifty is traded overseas, which is on SGX.
So as an external exchange, you look at 20 to 25%.
That's correct. That's what we think is realistic, because that's when, when your volumes are much smaller than that, you don't have an interplay between the domestic and the overseas markets. And you can't expect volumes much higher than that unless there is difficulty in getting into that country and out.